Okay, so we're going to have a nice relaxing webinar today. I want to relax today. Do have to give the disclaimer first. Trading is risky, and you all know it's risky. So we have to show you that. I'll just let you read that. I don't want to read it out for you. What we're going to talk about today, we're going to talk about something that you've probably not heard of before. And that's not because it's particularly new. It's just that it's something that people are doing in the prop world. And I think it's not really been formalized before or turned into a method. So we're going to show you this. And this is going to be a way to help you move, for those of you that aren't doing very well, for you to get out of that loop. Okay, because we've all seen these statistics that we're looking at now. These are statistics we did in a webinar the last time we kind of did an open session at Jigsaw. So we can see in the session before, we got a lot of people trading and a lot of people putting a lot of time in 10 years. Now, if you're in a prop shop and you weren't profitable after 10 years, well, you'd be very poor indeed because they don't give you a salary. So obviously, it doesn't take 10 years to learn to trade. It takes a lot less than that. It's more 0 to 6 months. Okay, but what you can see is there's a lot of people losing money, and people still really aren't on the path to success. So even though they're losing money and they've got some good tools and they've got the right education program, there's still a couple of things missing that they're not doing, and we're going to talk about those things today. So people are just not getting it, but most of you in this room today will not follow what we're talking about today. So there is a degree of self-sabotage going on. And it's not an intentional self-sabotage where people say, I'm not going to do this, I'm not going to do that. It's people just getting sidetracked and doing different things. So you need to be quite single-minded. But anyway, we're going to have a challenge for you. And this is the challenge, right? And this doesn't apply to somebody who's just started. But this does apply to anybody who's been doing this for over a year. Especially the guys who, even if you've been doing this for 10 years. So the challenge is for you to get profitable in 4 months or quit, right? So you walk away after trading. So if you give this a real try and kind of stop the bad habits that you've got now, is there anybody in here who's willing to walk away if they're not profitable in 4 months? That if they were convinced, if you were absolutely convinced, right, that you were doing the right thing and putting the work in and doing exactly what you should be doing, would you quit? Because I'm going to suggest that some of you probably should, and certainly in 4 months, if you don't follow what we're talking about now, if you're not going to follow take the right approach, do this right, you probably are better off just walking away. Okay. The significance of 4 months could be 4 months, it could be 5 months, it could be 6 months. Actually, if you're not profitable in 4 months, you will absolutely know. If you follow what we're doing today, you will know whether you're on the way or not. Okay, so you won't be in that position where you've been trying for 10 years or 5 years and you're still not really sure if you're any closer or not. Okay, so my suggestion is, and I would like to have people have a think about this. You've either got to do it right or stop. Right? There's no walking into it. There's no easy way. There's just the right way or stop. Okay. Now there are a few things getting in the way of us doing this. First of all, there's a really big problem that somebody else's techniques always sounds easier than the one you're using. Right? Now this is everybody. Right? If you ever talk to a trader and they tell you what they do, it's going to sound easy, right? If you talk to somebody who's just learned how to ride a bicycle and they told you how they did it, it will sound easier than it was. So when somebody tells you what they're doing, they're not really telling you what it took for them to get there, right? I mean, really, what it took inside, the pain they went through, the hours they worked, that really doesn't come across when somebody's telling you about a particular trading method. The other thing people don't tell you is the indecision they feel when they're about to take a trade. Okay, so a lot of people have got this perception that when you trade, it's there's some people that trade, and when they place trades, it's actually easy, and they're actually very, very confident, and they think it's just going to go their way every time. So when you talk to another trader, there's a lot of things that don't come across when they talk about their method. And that kind of leads you to thinking that what they're doing is easier than what you're doing. And of course, the problem is if you keep thinking that, you keep moving from method to method to method. And as you look at any specific method, you start to look at it at a high level, and you look at a method and you say, well, that looks easy. And then you start to get involved with the detail of a method of trading. And that's when it becomes very tricky, and that's when it becomes difficult. So you've got that kind of superficial first view. When you first hear about a way to trade, you think, wow, that sounds good, I'm going to get into that. And then the more you get into it, the harder it seems to get. And it's going to get harder and harder and harder. And then there's just suddenly a period when it becomes a little bit easier, and then a little bit easier and a little bit easier, and you've actually gone through that learning curve. And it's very difficult to get through that learning curve, because when you get to the point where it's very difficult, you can go onto the internet, surf around, and you can find an easy way to trade. You can find a new training course. You can find anything. And every time you do that, you're starting again. Now, for those of you that have been doing Jigsaw a while, there was one guy who got a prop position. We used to have a chat room on Skype. And there was one guy that got a position in a prop shop, a London prop firm. And he got taught how to trade at the London prop firm. But every week, even though he's at a prop firm, and even though they're trying to keep him on track, every week he'd change what he was going to do. He'd make some small adjustment. And every time he made that small adjustment, he was effectively starting again. Okay? So, when you try what somebody else does, it's not going to work on the first attempt. It's not going to work on the 10th attempt. It's just not as easy as they make it sound. Okay? And then what quite often happens is somebody tells you, even if you buy a course or whatever, you buy the course, you do what they tell you to do, it doesn't work out for you. Your kind of mental reaction is to say, well, that person wasn't honest. Okay, so I did what they told me to do, it didn't work, therefore that person is a scam artist, that person is a charlatan, and there are a lot of scam artists around, right? But we have to distinguish between whether we gave it a real go, or whether it's just a part of the learning curve that we were just naturally not very good at it to start with. Now, what we're going to look at today is related to this, which is the way a retail trader learns and the way a prop trader learns. There's a difference, basically. And with a retail trader, retail traders go shopping for techniques. They go shopping for method. So they go around and say, give me a technique. Somebody gives them a technique. And if that technique doesn't work, there's no way to rectify it. If you're given a technique, you don't know why that technique works, you don't know how that technique was created, you don't know how to adjust that technique. With a prop trader, they spend a lot of time teaching traders how the market behaves, right? So they teach you about market behavior, first and foremost, right? They do drills to teach you about market behavior. Some of it is about learning about yourself more than anything else. So you can do all these drills, and they're going to teach you about how the market behaves. And they are going to tell you techniques. They will give you techniques, okay? But the way you trade will probably not be like any other trader in that prop firm, right? So you'll go through this cycle with them where they'll say, right, this is how the market behaves. This is what you need to see. This is how you're going to look to take advantage of the market. And they're going to put these prop traders in a position where they're actually thinking for themselves and actually developing their own technique. Now, it's not they're developing a technique from scratch. They're not just starting again and saying, right, I'm going to not do what anybody else does, but it's going to be nuanced and it's going to be about what they see. So they might show you 20 different market behaviors, of which 5 really stand out to you. And those 5 that stand out to you will most likely be the ones that you focus on. And then there might be particular ways to trade that they teach you that you apply to those 5 different market behaviors. So there is a difference, and the big difference is, and this is the bit that really hasn't been explained well or probably even thought about much in terms of education. It's this cycle that we need to get into. It's this cycle that helps, because when this doesn't work, when your technique that you've built around the market behavior doesn't work, you can see if the market behavior has changed, or you're just not very good at the technique. So if the technique you try or a technique you apply doesn't work, it's either going to be the technique isn't right or that the market behavior changed. Okay, so when the technique doesn't work, you've got like a feedback loop where you can go back and look at the market behavior and say, well, should this be working? And if you look at your technique, your rules, and say, these are the rules for that market behavior, and yes, the market behavior did exactly what I expected, but I didn't make any money, it just means you suck at that technique at this point in time, right? But most retail traders do not have that information. They don't know if they're failing because they're not very good at the technique, or they don't know if they're failing because the market behavior has changed. Now, what we're going to talk about as well, before we talk about how to implement this feedback loop, it's probably worth talking about how not to make money in the market, because what many traders are trying to do is, I wouldn't say impossible, it's extremely difficult. I would say impossible, but I know people get really put off by that, because this is something that everybody's trying to do. So this is what many traders are trying to do in the market today. It's the basis for much of what's discussed on trading forums, and it's support and resistance. So you get a lot of people by asking, what's the best way to find a support level? You know, very simple question. We hear it a lot. Or people say, how do I use order flow to confirm a support level? But nobody seems to be asking, are support levels causing bad trading? Or are support levels a place I should take a trade? Or has anyone ever proven that support levels are actually a valid concept? Because before you say, what's the best way to find a support level, you should be asking, are support levels real, right? Now, we all know the story. This is what people are doing. You know, the market is moving down towards support, and all the retail traders are trying to buy it, trying to find that elusive support, trying to buy the low of the day, getting into the hero trade. It's the way you pick up a trading book, you go into the internet, that's what they're telling you to do, right? They're telling you when a market's going down, you have to somehow hit a bullseye and find the exact spot it turns around, okay? And obviously the problem with that is that to get to support, you have to be moving down. So anytime you try to buy a support level, you are buying against momentum. You're trading against the market. But everybody is talking about support and resistance, right? So you go around and you say, how could a concept like support and resistance be wrong? How could that be possible, right? Because everybody's talking about it. But the problem is everybody's losing money, right? 95% of people are losing money. But they're all talking about support and resistance. So there is a good chance that they could all be wrong. Now, what I would say, though, about support and resistance, it is very good to set bias, right? So if you have a support level and the market moves down to it and then starts moving up, there's a good chance that additional participants will come into the market and join the move up. Okay, so support levels, to an extent, I believe personally, my personal experience is that support levels are good for setting bias. So when a market moves up in the middle of nowhere, it's like, okay, it might have turned around. But if the market moves up around a support level, there are lots of people that trade support levels, lots of people that will see that, and you do actually see a lot of people coming into the market. But trying to buy the support level, trying to nail the turning point, I literally don't know a single person who's managed to do it. I know a lot of traders. I don't know a single trader that trades like that successfully. I mean, to be honest, I don't know a single professional trader that trades like it unsuccessfully. They're doing different things, basically. So what I would say today, I want to say this because what I don't want you to do, I don't want you to apply what I'm talking about today to this kind of trading, because I think you'll probably spend a month or so doing the analysis that I'm going to ask you to do and find out that you're not really getting anywhere with it, okay? Now, what we would also say is with support and resistance, if the market's in a range, I think you are absolutely fine fading a range, a small intraday range. But I'm talking about, market's gone down 10 points and I'm trying to nail the turn, okay? But basically, this is what a lot of people are trying to do. It is causing people a lot of problems. It's almost impossible to do it consistently. And like I say, I've met people that have been trying to do this for 20 years, even though they've got even though they've never seen any evidence that it can actually be done. Okay, so just be careful of that. So the thing that most people think, or most retail traders think, that's quite damaging is most people think that you have to have movement in the market to make money. Okay, and that is not the case. What you need to make money in the market is some behavior that repeats itself and that you can exploit, right? So we'll just have a look. So volatility is a behavior that you can exploit. For instance, you could chase a very volatile market around and just wait for the market to spike against the trend and sweep you into a trade, just trying to get a good price. So volatility in itself, you can trade, okay? News events you can trade, and I'm talking about like macroeconomic news events. I'm also talking about earnings releases. A lot of stock traders trade earnings releases. It's not really fundamental analysis. It's not really technical analysis. It's like something's happened and the market's going to take off in one direction. Very, very fast moves, very furious moves. But some traders do specialize at it. A lot of prop traders specialize at it. A lot of people say don't trade the news. Well, some people specialize in trading the news. And obviously, if you've seen the market move on a news event, it's very obvious that people are trading the news. You can make markets in a slow-moving market. So, being a market maker, a retail market maker in a fast market that's moving one way is a little bit tricky. But you could take, for instance, you could take wheat at 6 o'clock in the morning US time when it's not really moving around much, and you can just do some market making techniques, just trying to get bids filled and then get out on the offer. You can also trade markets that are not moving at all, right? So you might find an instance or a behavior that repeats itself when a market goes to a particular place and just churns tons of contracts. So one example of that would be the point of control. So the point of control is the price that's traded the most. For me, I'm a day trader, so everything's day time frame. So the point of control is the price that's traded the most volume for that day. So if you get the S&P 500 in a trading range where you've got maybe 10 ticks where it's just going up and down, trading over those ranges, you've got that price in the middle that's the most traded price, right? When it gets to that price, it's going to churn. It's going to churn a little bit when it gets there. Generally speaking, it doesn't just slide through. Sometimes it will, right? But generally speaking, it doesn't slide through. So you could say, right, I recognize that when the market gets to that point, it's generally going to churn around. And you can trade that. You can say, right, I'm going to put in a bid just below the point of control, right? The point of control. And if I can get a fill, and after I get a fill, I don't, the buyers are still buying and I don't see a lot of selling, I'm going to stick with the trade and I'm going to get out on the other side. So you can trade a market that doesn't move. I know a trader I was talking to a few weeks ago, he's trading some strange interest rate products where he literally sits on the bid. He can be sitting on the bid for 4 or 5 hours. Market's not moving, but basically he will get out on the other side. If he gets filled, he will get out on the other side. He might stay in that trade a couple of days, but he will get out on the other side. It's just the market is with, it just barely moves. So because it barely moves, he knows it's not going to run 100 ticks against him. It probably doesn't move more than 10 ticks in a week. Okay, so you can make money out of that. It's not exciting, right? But you can make money out of that. You can also make money out of things that are low win rate. So for instance, you could look at things like iceberg orders when you've got absorption, and you could bracket stop orders around an iceberg to try and capitalize on the breakout. So if you've got a lot of contracts traded at one price, you don't know which way it's going to go. So you put a stop above and a stop below to sweep you into a trade and try and capitalize on the move away from that. Now that would be a trade where you might not have the highest win rate, but you've got, you might not have the highest win rate, but you've got a good risk reward, because what's going to happen is you might put the stop, you might be like 3 ticks away from where the iceberg order is. If you're right, it could put in a nice little run. If you're wrong, you're literally wrong the other side of the iceberg. So you're looking at a behavior that might repeat itself. It might not be high win rate, but the reward is generally much better than the risk. Okay, so all you need is a behavior that repeats itself and that you can exploit. Now, what we have to do is we have to keep it in the realm of the retail trader, because none of us are going to be writing barrier options for Forex markets anytime soon. But we can make money for somebody that's not moving. You might not be able to make much money market making a really slow market for one tick because your commissions aren't very good. Okay, so what I would like to say is, as you go through this process, for those of you that do, you will probably see things going on in the market quite often, and you might think, well, I can see that quite often, but there's no way to make money from it. And what I would do is, if you feel like that, take a step back and or send me an email. Take a step back and have a think. Well, maybe there is a way to make money from that, and maybe that could just be a supplementary trade that you take that isn't your main kind of bread and butter trading. Okay, so what I'm going to suggest, if you're not making any money now, is I'm going to suggest you forget making $50,000 a day for the time being, right? So if you're not making any money trading, it would be better to make $100 a day or $50 a day or $10 a day than to lose money, okay? It would be better to book some profits, no matter how small they are, than to just keep perpetually trading sim for 20 years. Okay, and that's going to be the goal. So this isn't an end goal forever and this is all you're going to do. What we're trying to do is get to the point where we can actually start booking profits, and then we can start pressing that advantage. We can start building on that. We can start expanding from there, right? So with a prop trader, they're going to be like very, very nervous. I mean, these prop traders, once they've been there a few years, they're not nervous about trading. It's just kind of a day job. Of course, they get angry, they're emotional, but it's not like a new trader. A new trader's like, he's nervous every time he's clicking the mouse, right? And that new trader isn't swinging any size, and he's a bit nervous, and he hasn't got his confidence, but it grows over time. So profit isn't like a final destination. Being profitable is just a step on the journey. Okay, so we're going to take one behavior, one event in the market, and what I'm going to suggest to you, I'm going to suggest that you study that, and we're going to go over some examples. Study that behavior, document it, and then figure out how to trade it. Okay, like I say, it's not an end goal, it's a stepping stone. Okay, so let's look at an example of a behavior in the market, right? So I have a trade I take, it's called, and I call it an opening trade. I've done webinars on it. It's on the advanced course on the Jigsaw site if you want to have a look at it. It's an opening trade, and what it is basically, when the market builds a lot of volume in an area before the open, the extremes of that area will very often hold, right? So just before the open, the market starts building a lot of volume, like 10, 15, 20,000 contracts at a level. And then the market opens, it'll come to that area, it'll tag the area, and then it'll zoom off in the opposite direction quite often, right? Not all the time. And that is just a specific behavior, and it's just because people have got positions there. And a lot of people that are coming in new to the market, I'm not sure, maybe they don't know those positions are there, but it's just where people have positions and people defend those positions, right? So in my observations, what I noticed, this happened usually during the first 15 minutes after the market opened. So after that, it really wasn't that great an opportunity. It happens once a day. And it happens, generally speaking, 7 out of 10 days. And it happens less often in the holiday period. So, the past few months, it's not been a great trade. It's been there, but it's not been a great trade. And what's happening is the market has a tendency to bounce off extremes of high volume built prior to the open. Okay. Now, when I'm looking at this, I'm looking for, well, what else is going on when that happens? So, the things I also see, I see the Dow and the Nasdaq cooperating. So if the market moves down to the area of high volume, if the Nasdaq and the Dow are firing down really fast, then they're not cooperating. I want to see them sideways. I want to see them going up. I want to see no major news events, like Kim dropping a a bomb, something like that. Nothing that's really going to hit the market. Also, if there's a big gap down, it doesn't seem to work so well. How often does it fail? Well, about 30% of the time at a max. And again, it depends on the time of year. But generally speaking, it's going to fail if the Dow and the Nasdaq are running against the market. If there's a high volume pushing through the level, if we've got a lot of volume hitting into the market, the upside, 2 or 3 ticks, quite often it'll hit the level, it'll move up 2 or 3 ticks, and then it'll fail, roll over, done. It's failed basically. So that is upside, but it's probably not upside you can take advantage of. But we're not really worried about that at the moment. Sometimes the market's going to push up all day, but about 2/3 of the time you're going to get 8 ticks and potentially a lot more, right? Downside, after it's moved against you like 3 or 4 ticks, basically it's unlikely it's going to recover. But you can usually tell before it gets to that stop level. Okay, so effectively, these are observations I've had about the opening. Okay, and it's summed up just so I can put on a slide. So does everybody understand what that is? Okay, does everybody understand what that is and what's different about that than a trading plan? Okay, so that is just saying I've looked at something. Now let me give you some other ones, right? Let me just pull see if I can get a DOM across. Right, so let's just see what the what crude's doing, right? Oh, I'm not connected. Okay, let me just might help if I connect, right? Let me just connect. Okay. Alex, when I say bounce off high volume, I'll show you once we get the volume profile on. Okay, and I'll bring the S&P. Okay. So what I mean by high volume area, I mean like this high volume area that the market bounces off it. Okay. So another behavior, not on a day like this, another behavior, for example, might be crude stopping and starting. Okay. So crude moves, it stops, then it moves again, it stops, it moves again. When it stops, it quite often sticks for a minute and builds a range. And that is a behavior. And we know it's a behavior, but like, how would you trade that? How would you trade that behavior? Well, you'd have to study it a little bit more to kind of have a look at exactly what's happening when it stops. Like how many contracts trade when it stops? How long does it stop for typically? What's the market doing when it's about to break out in terms of, volume hitting into the bids and offers? Is there anything going on in another market that's going to tip you off to that happening? So, stop starts on a volatile market, you could have momentum trades. Okay. So we know that there's a lot of momentum on crude. So when do we have momentum? We have momentum after news events. We also have momentum after breakouts, right? So we could say, right, I'm going to try and trade momentum trades. So I'm going to watch crude and I'm going to try and find when the momentum breaks occur. So I'm going to wait for some consolidation and I'm going to wait for the momentum to appear, and then I'm going to get in, and then I'm going to take what I can from that momentum, right? We might say on the S&P 500, I might trade a range like this. I might say, right, I'm going to wait for a high volume area in the volume profile to appear, and I'm going to trade the extremes. Okay, so how do I trade the extremes? Well, I get to an extreme. What do I want to see? Well, I don't want to see high volume hitting into the extreme. I don't want to see the Nasdaq and the Dow screaming up out of their ranges. I would like to see an iceberg order. Okay, I don't want to take the trade on the 10th hit to the extreme of the range, right? So we're talking about some fairly basic behaviors, right? And you study those behaviors because that's what you're going to have to trade, right? So if you don't know something that your market does, right, you couldn't possibly trade it, right? If you don't know what your market does, you can't trade it, right? I mean, how can you trade it? Okay, so I'm going to wait for the third candlestick, and all that kind of stuff. And even if that's what you're going to do, watch it live, wait for the third candlestick, write down how often it fails, how often it succeeds, all this kind of stuff. I'm not talking about backtesting, I'm talking about watching it live. You know, what's going on? How fast is the market? Okay, so what we're trying to do, write down a behavior, right? So ranges, intraday ranges are really good. Intraday, volatility moves are really good. You could just have a market moving and say, right, when a market is in an intraday trend, I'm going to follow that market. I'm going to put a bid 5 or 6 ticks behind the market in a market that's moving up, and I'm going to wait for it to spike down and I'm going to get in. Okay, so what you've got to do then, you've got to watch that market. What I would say, watch it for, probably 1 or 2 hours a day. If you can find a time, the same time every day, where you can watch the market for 1 or 2 hours and try and nail a behavior, or try and find a behavior. What are the market conditions when it appears? Is it there some days and it's not other days? And then just basically own that behavior. And then the next thing you need to do is create a plan, right? And this is how you're going to trade the behavior, right? So the plan for this would be, well, when to enter, it's 9:30 to 9:45. When there's a step in the profile, less than 8 ticks away, okay? Because I found in the research, if you've moved too far away from the area of high volume, it doesn't work. It's not a relevant area. People aren't positioned there anymore. If the market opens within the area, you trade the first hit to the extreme. In other words, if it goes up from within the area, you sell it at the extreme. If it goes down, you buy it at the extreme. Quite often, I'm talking about buying it absolutely blindly with no confirmation at all off the order flow. Okay, it's really, really fast. Now, if the market opens outside the area, you take the first hit to the extreme, and if that fails, you take the hit to the other side of the range. Okay, a bit more caution on that one, though. So basically, I'm gonna see potentially I'm gonna have to take 2 trades on some days because the first hit's gonna fail, but I'm gonna still take the second hit as long as it's within those 15 minutes. Trigger, yes, an iceberg at the level is nice, but often you don't get that. What you often get is it'll move down, bounce up, move back down again, and then you get in. So basically, you'll see a little bit of a bounce, and then it'll come back down, and that's where you get in. Your entry price is 1 tick away from the area, but no more than 3 ticks. So what you're going to find is you will not get filled at the extreme itself. So you need to put an order 1 tick away. And quite often you're going to miss and not get filled. And then you can chase it, but not more than 3 ticks, right? Size, 10 contracts, 4 off at 4 ticks, 2 off every 4 to 6 ticks, basically. Again, it's just suggestion. No, I'm not actually suggesting you do this. I'm just saying this is how I planned it when I first did it. Okay, and basically what we're trying to do there is trying to take advantage of the runners. If you hit 4 ticks and you don't get a fill, so if you hit the first target, don't get a fill, you kill the trade if you come back to your entry price, because basically you're going to fail. Because basically it's supposed to pop, and if it's not popping, if you can only pop 4 ticks, it's not popping. Kill the trade if correlated markets breaks against, and then the ES starts to move against, and a 4 tick stop. Okay, so what we've got there is 2 separate things. We have a behavior and we have a plan. Okay, the behavior is what does the market do? Okay, now I know there's this, there should be a visual. I hope you're all seeing it. I know there's this concept of one technique in all markets on all time frames, right? That is, again, something I've never seen, right? So this is very specific. It's going to be specific to your time of day. So for instance, if you were trading crude and you were awake in the Asian morning session, crude behaves in a very particular way during that time. Then when London opens, it behaves completely differently, right? Completely different set of behavior. When the S&P 500 opens, crude behaves completely differently again. So what you need to do is pick a time and study that behavior. Like I say, it doesn't have to be anything complex. It could be just breakouts, right? I'm going to look for breakouts, okay? So I need something that breaks out fairly often. I need to try and look and find a little bit more information about why the market breaks. And you've also got a lot, if you're not sure what to do, there's a lot of educational material that we've got on the site, right? That you've all, pretty much probably all of you have got access to. Just pick something from one of the videos. Pick something from one of the videos. Could be the opening trade. But what you've got to do is study it, okay? Study it so you know what happens, okay? And then you make a plan. And quite simply, if you do that, if your plan does not yield any money, right, you will be able to go back at the market and see if the market behaved differently or if you traded it badly, okay? And if you really do that and you do that seriously, you might have to give up. You might find a behavior that you thought did something, but it doesn't, and you found out, during trading, but you know, right? You know that the behavior failed because you've got the behavior documented, right? Now, this is effectively what prop shops do, but they just don't do it formally, and they don't spell it out exactly in this method, okay? Now, what I will say is that it's very likely, and I've actually had people do this, so this isn't something that nobody's tried, right? What will happen most likely is you will start out looking for one behavior with an expectation of how to trade it, and you will very likely end up trading a different behavior that you discover along the way. Okay, so you might find that you're looking, there's one example of a guy who was looking for range trades on a market. He was looking for small ranges and to scalp the range, and he actually found out a method of trading breakouts on that market, and a quite successful method. But he would never have found that if he hadn't taken that time to sit and study the market. Okay, so like I say, there's a lot of educational material out there. You've really got no excuse not to be able to find a method, right? A lot of you have done John Grady's stuff. A lot of you have done the Axia stuff. You've seen our videos. There's a lot of stuff out there. You just need to focus on something, right? And you should try and focus on something, in my opinion, right, that gives you multiple opportunities per hour, right? You don't want to be studying this for 8 hours a day. And you want to try and do something fairly high frequency, because it's going to be pretty painful if it's like one trade a day. So breakouts from short-term consolidation. And I don't mean taking them all, I mean study them. What is the consolidation zone? What counts as the consolidation zone? So you say, I want to take breakouts from short-term consolidation. So I'm going to look at this. So I'm going to first find out, what's short-term consolidation? Well, you might decide, well, okay, on DAX, anything less than 2 minutes isn't really a short-term consolidation. And anything less than 5 ticks isn't a short-term consolidation, right? So you first have to say, well, okay, what's it really mean to consolidate? And is this consolidating now, or is it just, a brief momentary pause? And there's going to be a time when you say, okay, now I know that's consolidating, right? So now I can look for the breakout. Momentum trades. Well, the market's going one way, just get in and ride it, right? So if you've got a market like the DAX or crude, you can literally just say, right, I'm going to trade momentum. Now, there's going to be days where there's no momentum in the market, like crude today. But you find a market where that's the exception, not the rule, okay? And then you look at momentum trades. Volatility entries, letting the market sweep you into trades, okay? Continuations around icebergs. Like I say, a continuation around an iceberg or a make or break point, it might not be high win rate, but it might just be a really good risk reward. Range trades, looking at stock traders, looking at news. There's loads and loads of different ways to do this, right? So there's no real shortage of things to look at. You don't have to invent something. You're better off starting with something that somebody else has kind of sanity checked first. Okay? So you write a basic outline of what you're expecting to happen. You've got to go into this with some expectations. I know there's, there used to be this thing on the forums. It's not, you don't see it so much anymore, but like people saying it takes 10,000 hours to learn how to trade and you've just got to sit there and watch it. Well, you can't just sit there and watch it because you're not going to see anything. You have to have some kind of expectation, right? You have to have something to look for. And you're going to study it on a live market. I wouldn't bother with replay. I would study it on a live market. You shouldn't do it on replay. A couple of reasons not to do it on replay. When you come to trade it, it needs to be at a time you're available, right? So there's no point studying like the market open on replay if you're never going to be there at the market open, right? If you're working when the market opens and you study it and master it on replay, you're never going to be able to trade it anyway, because you're not going to be able to, you're not going to suddenly give up your day job. You know, it's going to be a gradual process, and it's going to be very difficult to go through that gradual process if you're not actually at the market, right? You're going to make some notes, basic statistics. I'm not talking about, becoming a math wizard, but you should know how often it works, how often it fails, how often you get, what the signal is to get into it, how you know it's now, how you know you have momentum, how you know you're breaking, and, how many times will that signal be false. You should have those kind of basic things, because when you start to put your method together, you're going to need to know how often what your target rate is of winning trades, right? You have to be ready to discover a completely different way, different behavior as you go. You will probably end up trading something completely different, but that's just a part of the process, and that's exactly what happens with prop traders, right? They get taught one thing and end up trading another thing, just because that's a completely natural thing to do, not because they're superstars. Don't ignore correlated markets, right? That's a really important thing. Don't just focus in on your one market. You've got to have a kind of knowledge of overall level of activity in the market, what's going on, news, that kind of thing. And once you're confident, you understand it. And what by confident you understand it? I'm talking like 2, 3, 4 weeks. I'm not talking about 6 months. You want to basically get your plan down, or get your behavior down, and then start writing your plan. And then, then that's your kind of baseline. And then you're going to start to execute, and you're going to start to make adjustments as you go, right? So you haven't got it's not a game of perfect. It's a game of getting something down you understand fairly well. And when you start to execute it, just having that ability to say, look, I've executed today. I did 10 trades. I lost 10 trades. I'm down on my demo account, $1,000. What was wrong? And I can say, well, I'm going to go over the video of what I did. And, well, the behavior wasn't there. Okay, so the behavior wasn't there, so I lost because the behavior wasn't there. Okay, so is there any way I could tell, any heads up that behavior wasn't there? Or maybe you documented it wrong, right? Or maybe there was just something going on, it was a news day. Or what you might find is you did 10 trades and you lost 10 trades, and the behavior's there, and you just weren't very good. Okay, and what that tells you is you're okay, you're on track, but you need to improve your execution. Okay, and again, this is something that most retail traders, they don't have. Okay, I would advise you join the leaderboard and track your trades as well. I'm going to be pushing the leaderboard very hard, and I'm going to be pushing to the point where from now on, if somebody wants to help, I don't mind helping people out. If somebody wants to help, they will have to be on the leaderboard. I don't mind helping you out, but I've had people have helped out, and they've and I say, okay, we spent a lot of time together, and can you send me results and and I'll get a day's worth of trading back. And it's like, well, you're not really doing it, are you? You're kind of paying lip service to it. And to be honest, I don't really want to spend too much time with people who aren't willing to kind of put the daily work in to actually improve. Okay. What I don't want is somebody who goes 2 or 3 days, gets disheartened, and then doesn't do anything until I email them. And then they kind of scramble around, put together a few days history on Excel and send it to me. I want to see the trades myself. Okay? But the bottom line is you want to compare your execution with the behavior. Right? I don't know any other way. Maybe somebody can think of a better way to move forward than this. I'm not sure. But anyway, as I say, I would like to see people getting on the leaderboard. So that is all I have to tell you. That is all I wanted to kind of go over. And one of the reasons I wanted to do this is because, we've changed the deliverables at Jigsaw, and we've kind of dipping our toes in the education world. I don't want people using that education without having some kind of framework of how to actually apply the knowledge, right? Okay, somebody said they've got no idea of what I'm talking about. Okay, so let's just go over the questions so far. Please start typing questions in. It will be recorded. Okay, let me go down. Okay. What's the significance of... Okay, so with significance of 4 months. maybe now, can I ask, can you see the significance of 4 months now? That you shouldn't really, if you do this with one trade, just one trade on one market, you should know within 4 months. You might not be profitable, right? But you should know within 4 months if you're on track or not. Okay. Okay, and James has got a point. Okay, so James, something that's strange to me, he's watching the ES pull large orders. Let me move that across. Let's see if you can see that. Watching the ES pull large orders, but the price ticks up 1 or 2 ticks and then collapses back down. I see this often, but I guess you're saying don't understand it. Well, James, you don't need to understand that. What you should probably have a look at is that an opportunity that you can take advantage of, right? So first of all, you could start looking at that and you could say, right, I usually see that between 9:30, 11:30. Get yourself a notepad and just watch how many times it happens, right? So first day, just watch how many times it happens. How many times you see him pulling the orders, price ticks up 1 or 2 ticks and then collapses back down. So you might say, okay, I saw that happen 20 times, okay? 10 times it went down, 10 times it went up. And there was it was not indicative of anything. Or you might say, I saw it 20 times, and 20 times, when it started to collapse back down, it went down 8 ticks. So let me just find down, right? Okay, so you might say they pull the orders, market ticks up a couple of ticks, and then collapses 6 ticks. Or 8 ticks or whatever. So what's the trade? Potentially, what could your trade be there? Well, the trade could be, you see the market tick up a couple of ticks because they pull the orders, and then you can put a stop order in to sell maybe down here, right? So if you see the tick up, they pull, you see the 2 ticks up, and then it starts to collapse, you could potentially put a sell stop order in there and a buy limiting order in here to get out, right? So you could trade around that, but what you'd really need to know how often it happens, how often do you get like a positive signal, a good signal, how often do you get a signal that isn't right, a fake signal, how far does it go when it works, and how far does it go when it doesn't work, right? So it's just, again, fairly basic information, fairly obvious information. Now on market close on ES, you see very high volume. Yes, Paul. Now, the funny thing is, Paul, I very rarely see the close. And I remember the first time I really watched the close, I think I was actually in Chicago at the time. And it amazed me how much volume was trading over a very small set of prices. And I have no doubt that there are traders that just trade the close, right? That do nothing else but just try and take advantage, because there's a lot of people unwinding their positions at the close, and obviously there's got to be somebody else on the other side of that trade. Okay, so the close, again, what you're talking about there, Paul, is basically you're talking about behavior that you're seeing in the market over and over and over again. So now the question is it behavior you can exploit, right? And it possibly is. I'm not saying it definitely is, but it's possible. For high volume, I might consider in the previous overnight session, now, for high volume and on the morning trades, I'm just considering volume that traded just before 9:30. Okay, and in extreme, it's the steps in the profile basically. Okay, now what sample size is big enough to know a method is working? And I don't know the answer to that, to be honest. But if I saw a behavior that was happening 10 times an hour, and I watched that behavior for 20 hours, I'd kind of be I'd be confident enough to start to write a plan about that and start to move that forward. Now, the thing is, you're not going to, you're going to look, maybe you've done that 20 hours or whatever it is, 10 sessions, 2 hours of time, same time of day, same market. You got your 20 hours in, then you start to write the plan around that behavior, and then you start to move forward. You start to move your plan forward, and as you're moving forward, you will be making adjustments to the plan. You've got some more information about the behavior that by this time you've really mastered this behavior, and you feel that behavior is like a friend. It's like somebody that you've seen it that often, and it kind of puts a smile on your face. So yeah, it's done it again. It's done it again. It's done it again. Okay. So what I would say, I don't think you need a big sample size. I think you just need to make sure that you're moving in the right direction. Because I think, especially if it's a behavior that happens at frequent intervals, right? So, if it's something that happened once a week, I think it's a little bit trickier. But for me, if you spend 20 hours studying and then you make your plan and then you start to move forward and you start to see your P&L start to improve, it's going to be negative at the start. There's no way you'll trade it well to start with. But when you start to see your P&L start to climb, then I'd consider taking that live. And but you're always looking at behavior and always looking and seeing more nuance in the behavior. Tom, the leaderboard is via day trader at the moment, but that's changing. Have I tried my opening strategy with the close of the day? No, because it's 2 o'clock in the morning here now. And so if you imagine what time it is when the market closes, I'm always in bed. Cost for the leaderboard is free. It's literally a tool. It's to try and get people to employ methods like this and to try and get them a bit more confident and to actually track their progress. What a lot of people will do, basically, they'll try a method and they'll sim trade it and they won't do very well, and then they'll throw away, they'll have a bad day and they'll clear the sim account. So I just wanted a place where people's trading was available for them to review, to do statistics, to analyze, but without the ability for them to wipe it out if it didn't look good. Okay, so that's really what it's for. Somebody's asked about the institutional trading. We'll talk about that at the end. So Michael's saying if you start with crude, some of the behaviors I recommend, ranges, small short-term ranges, and momentum plays for crude. Again, you could use crude to kind of to scale, to sweep you into volatility trades. So if you imagine a market that's going up, you just trail your bids behind that market, hoping it just spikes down. If it spikes down with not much volume, you just stay with it. If it spikes down with volume, you get out of the way. So that's another way to do it. The other thing you could do as well on crude is sometimes when there's a lot of spoofing on crude, you can look at putting orders the other side of large spoof orders. Again, so your expectation there would be that it goes the other side of the orders and comes back. Now, that's not going to work every time, but you have to just kind of become aware of when it does work, what kind of market behavior, what's going on in other markets. For somebody very fresh to Jigsaw, what I would do is there's a video called New to Jigsaw Tools first that I would watch just to train your eyes to read this stuff. And then once you feel okay reading it, then look for a specific behavior. Look in one of the videos, go to No BS Trading. You don't have to get it from us, or go somewhere else and find someone that's legitimate and actually selling information about these behaviors, or look at some scalping trades for free on YouTube and just try and pick something up that you feel like you could realistically master yourself. Is ES a market for retail traders? Not, to be honest, for ultra short-term trading, I think there's better markets than the ES for short-term trading. Certainly there's friendlier markets. I mean, the grains are pretty good. Trade corn, trade wheat. A lot of markets that people tend to ignore. Crude's good. Crude's really good outside of hours, right? Probably not if you're in the US, but like if you're certainly if you're in Asia, crude's good in the morning. But I would have a look around different markets. The ES is a bit of a beast, but a lot of the time on the ES we do have good momentum. But just the ES, it's very moody, so you can have long periods where there's not much going on. The reason I used the open trade behavior for this example was just because that's something that I found myself that I actually use this for. So it's just a behavior that the difference was with that behavior, I wasn't actually looking for it. I was always sitting there at the open of the market and always watching it. And I was always told, don't trade the open. And I kept seeing this happen. And then actually I just came to the conclusion, actually, Pete, even though everyone's told you don't trade the open, nobody's ever told you why, or nobody's ever actually quantified it or proved it. So I just started to study it. So it's not a perfect thing because it's just once a day. and it only gives you one trade. I mean, there's no reason why not, but I'd prefer something that was, going back, I'd prefer to be looking at something that happened, a few times an hour. So I've got a few shots at it. Francisco, there's a video called Trading the Open that you can get, or you can send me an email and I'll tell you a bit more about that. I mean, it's literally you get one of these areas of high volume close to the open, close to the 9:30, and then it'll come back, tag it, and move away. The chat room, it comes with every purchase of the tools, Ben. It's been quite lively recently. The opening market trade, it was cake, okay? No, it's not just an example, it's something that happens. It's not a made up example. It's actually something that happens. You can observe it yourself. On the S&P 500, I don't know if it happens on other markets. I mean, you've got the crude open at 9 a.m. Eastern, but I've never watched crude to see if it happens there. So it could happen on other markets. I just don't know. I haven't talked about order flow because today I'm just talking about having a framework where you can separate the behavior and how you're trying to exploit it. So this wasn't really meant to be a discussion on order flow. In fact, you could apply this to any method. It doesn't have to be order flow based. I mean, if you're really convinced that candlestick charts are the way to go, you could do it on a candlestick chart method. Somebody's asking, is it better to look at different types of days? I wouldn't specifically look at day types like market profile theory, where they have like an opening drive and these different day types. What I would do is I would just look at the best thing you can do is look at the NASDAQ and the Dow and get a feel. If you're looking at the S&P, look at the NASDAQ and the Dow. If you're looking at crude, maybe look at the dollar index, look at natural gas, and that gives you a feel for how active the markets are. And when you see how active the markets are, that gives you an idea of how volatile they'll be. And then the other thing is you watch the size of the bids and the offers. So you see here the bids are all about 1,000, 1,200. That's kind of pretty high, for 2017. So that will give you a more choppy market. So really what I'll do is, instead of saying, well, a day is going to be like this, the behavior of a day or the volatility on a day can change, minute to minute. So I'd really just keep more of an eye on that. Because, the market can have a real roaring open and then just go sideways for 3 hours, right? And so you can't say this is a roaring open day, when it's in the sideways phase. Do you think we have to discover ourselves the behaviors because everybody sees different things? I think that's it, Lorenzo. I think different people see different things. I could say, oh, you see that? And they're like, no. And I've had people come to me, I design the jigsaw tools and people come to me and tell me they're trading this behavior on it or that behavior on it. And I'm like, well, I've never seen that. And it's like, I've literally been watching the same market for 10 years, right? And they'll tell me about something they see. And I'm like, I've never noticed that. So I think different people notice different things. But obviously what you're not trying to do here, you're not trying to notice something new. You want to kind of just, you want to start off with something that you got a fair degree of confidence in, that it's actually worth spending your time on. I mean, you don't want to start on like saying, right, I'm going to look at the full moon, and then based on the full moon, based on the moon phase, I'm going to do this. That wouldn't be a great place to start. But if you say, well, I'm going to start one with momentum or icebergs or something like that, then, that's a place when you're going through the work of looking for the behavior and it's a bit frustrating, you'll have a little bit more confidence to stick with it. How long will I watch a market behavior before moving on to another behavior? I don't think that will happen. Okay, Christian. I don't think you'll start looking at a market behavior and then move on to another behavior because it doesn't give you anything. I think when you start looking at the one market behavior, you'll see other things. And it might be those other things that you end up looking at, right? That you end up trading. If witnessing what appears to be an iceberg, yet price ends up breaking through it, traveling in its intended direction, should that be taken as confirmation to get on board? Well, Phil, like the one simple thing you can do with an iceberg, you could do, let's say there's an iceberg here, you could do this and this, right? You could put a stop order around the iceberg, right? You don't care which way it's going to go. You just know there's a good chance that when it breaks, it's gonna moving one direction. But yeah, if you've got a market that's trending up and there's an iceberg and then it starts moving back up, then that might be all you need to take a momentum trade. Okay. How many behaviors are there? I think there's an infinite amount of behaviors, right? I mean, like I said, you could trade a market that's not doing anything. Let's just find a market that's dead. Okay, ZT. Okay. Right. Look at that. So there's a market that's not going to move very far, right? There's a market. It's 10,000. We've got 10,000 on the bid, 60,000 offered, right? So that's a market that a lot of people wouldn't consider trading, but it doesn't move. So if you there's a lot of people there's obviously a lot of people trading that, right? Okay, it doesn't mean they're speculators, short-term speculators, but you're trading that for the spread, right? And you might just look at that and say, well, I wonder how I can get the spread, or under what conditions I can get the spread, and trade that, right? There's no limit of to the behaviors you can make money from. It's just being able to recognize something consistent and be able to know what the setup to that consistent behavior is, what precedes that behavior. Someone like myself is only focused on charts with chart trading strategies that I've purchased my entire trading thus far. In order to go forward with identifying behaviors and starting this process, what level of training with your tools would you suggest? It's up to you. I mean, I really, I don't want to just come here and sell you the institutional course, right? It's really up to you. It's up to you. I mean, personally, I would start with the basic. If it was me, I would start with the basic, because there are drills that you get with the basic course that will get you from I've never seen the DOM before to, oh God, yeah, I can see it now, right? There's kind of like an aha moment with the DOM where you think, man, I can actually see the people buying and selling. I can actually see the buyers getting stuck. I can see people getting stopped out. And I would get to that point before I started to, buy courses and stuff like that. Because when if you haven't ever looked at the DOM and you buy something like John Grady's course or the Axia course, when you actually look at it, they'll be talking about something, but you won't see it when you first start. So you need a few days to really get acclimatized and start to read the DOM. So my suggestion would be you put a little bit of screen time in. When you buy Jigsaw, there's some drills. There's a video called New to Jigsaw Tool that we kind of put in your face. It's on the first page of the manual, and that kind of tells you how to teach your eyes. And I'd want to do that before I took any training. Stage 5 historical trade analyzer. I've not used it myself, Pat, but if it's good, I will take your word for it. Correlated markets for crude. It's a bit tough. Correlated markets for crude, because I know someone who's really looked hard to find good correlated markets, and there aren't really good correlated markets. I mean, the mini crude, obviously, you've got the micro, or whatever it's called. You've got natural gas. You've also got the dollar index, obviously, because there's a relationship between crude and the dollar. But it's not like the S&P, where you've got like consistently good correlated markets to tell you something every day. So you'll find correlated markets, but on some days they just won't be a lot of use to you. I mean, if you looked at the dollar index and crude earlier this morning, they were doing exactly the opposite. And then you looked about 11 o'clock and there was no relationship. Same with the S&P 500 and crude lately. We've had long periods where crude and S&P 500 have been moving in sync, and then you'll just get periods where they don't anymore. But the days where they do, it's pretty useful. But then sometimes it breaks down. We've had periods where, we've had like big breakdown in crude, and then a few seconds later, or a minute or so later, the S&P's broken down. And that's been useful. But really for crude's a tough one. I mean, you probably get better correlated markets on the grains, the interest rates, the agricultural products. Treasury bonds, not my area of expertise. So it's not, it's not really something I can comment on. Leaderboards for any account that you trade. We'll have a look at it in a second. James, a good point. I wish we could select which account to place on the leaderboard. The whole point is that you don't. So we ummed and ahed about this. So it was one of the things we thought about. What if somebody's got like a demo account and they're just testing execution on or whatever. We thought, well, yeah, maybe there is a reason to only want one account on. But the problem is once you give people a way to kind of cheat or work around a system, then it becomes kind of useless. So it is like it's all in. So everything you do goes onto the leaderboard. Right, and it's just meant to be like that. It's just meant to be, because like I say, a lot of people are running away from their own results. We wanted to just give them something that didn't let them do that. Soybeans, no reason why not. Again, it's not as popular a market, but there's definitely opportunities there. Can you quickly analyze a trader trading on the leaderboard? Well, interesting. If we look at the leaderboard, let's just bring it. Leaderboard. Let's bring the public one across. Board. All right, let's just bring this across. Second, I'll have to move the questions out of the way. Right, if I do monthly, right, you will see. Now, as the month goes on, it will actually, the results get better. But you can see this guy's taken 39 trades. His P&L's only 815, right? Because he's taking little trades frequently. You've got one here, 6,000. He's made more money, but he's got a lower rating, right? And that's just because it's rated on consistency. Now, as the month builds out, you actually get points for trading frequency as well. So this guy, scalp, he's going to drop as we get further into the month. But basically, the leaderboard is rating you based on consistency. So if you are inconsistent, if we just click there, I think this is just demo. I hope. Yeah, okay. So this is a guy he's swinging wildly, right? It's not consistent trading, right? So he's made more money, but it was all on one big trade, right? So the leaderboard is going to rank you down for that, right? It's going to rate you down, so you might make more money. So that's really what the lead's all about. So you can't completely analyze a trader trading on the leaderboard. You can't make presume too much based on it, but it's a good yardstick. And the rating method we've got is actually from a prop firm, right? Now they don't score people the same way we do. But I said, look, how do you decide to make a trader live? And we went through the criteria, and then we said, okay, well, we can actually, some of that we can put in a formula algorithm, and some of it, we can't. Time frame is best for crude. If you wanted to just like scalp crude, market make crude, then the Asian session, early European time. Momentum moves, you're a lot better off in the US session. I find the open to be my best trade, Reeve. I agree. I like trading the open. Reeve, just a question. Are you trading the same way I am off the open? Or have you got something else? Demo account for trading futures has to be CQG because the fills are realistic. Now we are putting a sim trade module into to day trader with realistic fills as well, but right now CQG. Okay. Which futures markets for day trading momentum? Well, the faster ones, DAX, crude, anything that swings around a lot is a good market for momentum. But again, you just have to master it first. I mean, DAX is a kind of scary instrument. It's 25 euro tick size. So, it's good market trading momentum, but you don't want to start tomorrow. You really want to observe it. Regular non-day trader update. Basically, what's going to happen is the platform versions will go away and the platforms will actually talk to day trader. So the platforms, you'll still have the same capability, but it'll be through the day trader app. Okay. So we're trying not to update those versions now because we're trying to get everything moved over. Right, a few more questions. Bastian, buy, ask, buy, market, buy, bid, sell, someone. Should I use DOM to trade? I'm confused about the question, Bastian, if you could rephrase that somehow. I'm only recommending the DOM, and I'm focusing all the educational stuff on the DOM because it's what the prop traders use to get profitable, and I want to kind of I want to narrow the focus of Jigsaw somewhat. So instead of trying to have something for everyone, I want to just have something for very specific people who want to trade specific ways. Day traders to be able to use OEC feed. I'm actually talking to a company about getting a developer to do that. I don't know the date. Al Larson trades the sun and the moon and the stars. I don't know what to say, man. If people buy that, I don't know. I say good luck to him, man. I don't know. I don't know. I don't get that. I don't get how anybody believes that, but who knows? It's hard. It must be harder to sell Jigsaw than that. That's all I can say. Trading 101 was buy at support. Like I said, no, I don't think you should buy at support. I think it's a terrible idea. Buying at support means you buy a market that's moving down. Okay? Buy after support, right? So once support is held, then you buy because you're expecting momentum. So I do think the support thing's a terrible thing for the trade. I think it's one of the reasons for the 90% people losing. But yeah, types of day, like I said, there's no type of day. There's just type of activity right now. But I think when we've talked before about pullbacks a lot. You know, when a market's got direction and it pulls back weekly, I think it's a good opportunity to trade. And it's a good opportunity to get a good price. So I think there's nothing wrong with that. But you've just got to be able to recognise when a market's moving and when it's continuing, and then if it's continuing, what's the, if you trade in a pullback on the S&P, what's the down the Nasdaq doing, and really master it. Don't just dive in and trade it because it's a pullback. You've got to master it. What other things are going on and understand the behaviour, just so you know the behaviour is not good or you're not good. Highlighted trades can be iceberg orders, sweep trades, or high or low of the day. Daniel, if you want to email me or Skype me on Jigsaw Trading, I'll give you more information. We've still got people here, good lord. For the Jigsaw tools, before the price hike, am I still allowed to the live version of $50 a month? Yes, the $50 a month didn't go up. Will there be a footprint chart in Day Trader? Oh, that's asking, isn't it? There might be a bit of one, like a recent one, past 5 minutes or past 5 ticks or something like that. I really don't see the point in a full footprint chart because that's pretty much what Auction Vista does. It just highlights the areas with the circles. It just highlights the areas where a lot of contracts traded, and to be honest, that's really the best thing you get from the footprint charts, or for me. Heating oil, Nicholas. Well, heating oil to you too. I presume that wasn't a question, but yeah, no reason. Oh, heating oil. I presume you're talking about the correlations, yeah, with crude. But I think Nicholas, if you watch heating oil, is it very volatile? Because you really need something that's volatile to use against crude. Okay, so historical trade analyzer. Okay, Pat, thanks for that information. We're going to have some similar stuff in Jigsaw soon. We're going to be taking that in the direction of statistics and charting. How many months of profit consists on the demo do you suggest to start with the real account? That depends on the trade frequency, Lorenzo. So if you were trading 10 trades a day, and you did that for 20 days, to me that should be enough. There's 200 trades, right? So if it's one trade a day, then I think you have to be longer. But that's the reason that one of the reasons the prop shops start people off on higher frequency trading is because you get more trading experience over a shorter period of time. It just gets them profitable quicker. Day trader, there's a lot of problems with the Stage 5 platform and the plugin. So I want to try and get rid of the Stage 5 platform plugin and just have the gain feed going into Day Trader. Because the plugin, every time there's an update, we have to work. And I really could do without that, to be honest. Reeve, depends how it opens. Catch big breaks quite easily. Yeah, and again, it's just a matter, Reeve, of knowing when it's, knowing the signal. So on the S&P, you just got to watch down Nasdaq. If the down Nasdaq are going in different directions, the S&P is going to be sideways, generally speaking. So have a look out for that and see what you think. Study behavior from the DOM or combine it with Auction Vista. You could combine it. Personally, I think the DOM. Trouble is people don't want to hear that. People want to be told you can use the visual tools, but this is where it's at. This is the bread and butter for prop traders, and it's not that hard. You just got to bite the bullet and really study it. But if you want to trade around the circles, I would say you can trade around the circles, but you're going to see that on here anyway. It's just something you see on here, but no reason why not. Notes, Bruno, great idea, coming later. I've got a fantastic programmer from China that's just going great guns. But yeah, that's the plan. We're gonna turn it into full-on trade journal. Do you use charts in addition to the DOM Not really. I mean, I've used swing charts, just see which way the volume's on, but not so much now because I can see it on the dome. Is DAX bad to trade? Yeah, it would be if you didn't study it and kind of figured out what was making it tick. But I think that's what this is all about, really, is just actually trying to figure out what makes the DAX tick. Is it that wild, or can I kind of I'm gonna look at it and try and find a quiet period, try and find some quiet interludes, and see what's happening before those quiet interludes. You know, like you get blow-offs. You get blow-offs in crude a lot, where it just goes wild and runs up, and then you just get a load of absorption, after it's run up, and then it'll just fall away. And so, sometimes in a hectic market, you just need to start. It just needs to kind of, really blow its top. Bastian, you got your answer already. Which types of exit do you recommend? I don't do trailing stops. I get out of a trade. I don't do trailing stops. I get out of a trade when it's not moving up anymore. So if it's long, I get out when it's not moving up. So I'm kind of I guess I'm doing a trailing stop of sorts, a mental trailing stop. And I use profit targets because I really don't know where it's going. One thing about these open trades, it can go 3 ticks, it can go 30, and there's no way I can tell if it's going to go 30 or 3. So when I get into a trade, like one of those opening trades, I don't know I really have no idea where it's going to go. I just know where I think it's going to react. So I just scale because it's the best thing I could think of. Now, the other thing is just one of the guys that was doing this, funnily enough, I got kind of short with him because he basically said, he sent me an email and said, he knows the behavior and he knows his plan. And he said, I was thinking of changing my plan. Is it okay if I use one of these kind of orders, or if I get into the market like this? I don't know if that's valid. And it's like, dude, you know if it's valid because it fits the behavior, right? So when you talk about that profit targets, trailing stops, whatever, you're going to build that around the behavior. So you will know that. Now for me, I'm sure there's probably a mathematician out there that could find a more mathematically sound way for me to trade open trades. But to be honest, I can't be bothered. So all I could think of was just scale out and see what you can get out of it. Cumulative delta, absolutely recommend that. I think cumulative delta is also fantastic for setting the bias. Separate small pullbacks from continuations, absolutely. Yes, cumulative delta, it's actually, probably won't be very good. It's actually on the Auction Vista chart now, whether you notice that or not. So yes, we do. I do like cumulative delta. Gotta go. One of the best webinars, that's good. Somebody else said, I have no idea what you're talking about. Auction Vista seems scrunched. I'm going to get, one of the things I'm going to be doing with one of the developers, he's on holiday now, I'm going to get him to beautify the Auction Vista a little bit. It needs a facelift. And yes, Guy, we are going to keep it simple and clean, right? So, you did mention a competitor there. All this stuff about adding indicators and stuff like that to the DOM. It's like, oh God, here we go again. It's just leading people down the same route. So we're gonna avoid that. We lose customers because of it, but yeah, the idea is to still keep it clean because there isn't that much that works. And adding a bunch of crazy indicators is just gonna sidetrack people and have them spinning the wheels for 20 years. Trade the rand and dollar. You heard it here from Reeve. Next webinar, Reeve will talk about the rand and dollar. Reeve, if you want to do that, we can. Opening trade example. If it hits extreme, you're going in the direction away from the extreme. Yeah, absolutely. So if you have an extreme, you might have an 8-tick range. You open in the middle of the 8-tick range. So if you go down to the bottom of the 8-tick range, you buy. If you go to the top of the 8-tick range, you sell. Sorry. Now, if you open above the 8-tick range and it goes down to the top of the 8-tick range, you buy it. And it's not very clever. It doesn't sound very clever, and that's it. It is what it is, right? I can't make it sound any more sophisticated than it is. We will have connections to other brokers. We will update Tradeovate to use Day Trader. We've just got to prove the concept. We've got 2 platforms that we're hooking up to Day Trader at the moment, just to prove the concept. Basically, we can't do one because we've got to prove multiple. And so we're well into that. We got the the instrument window, we've got the volume profile, we've got the level 1, the level 2. We need to do the trading. So once we've done that, we'll be in a position where we'll be able to actually get the platform providers themselves to write the interface. We're not phasing out integration with stage 5. We're going to integrate to the data feed, so you'll be able to use DayTrader for trading, and you'll be able to use stage 5 for charting at the same time. Okay, so there won't be any difference in terms of what you can do with it. Will there be a Delta chart? It's already on there, so yes, it will be there. It is recorded. With DayTrader, you need to connect to the data feed through a broker. Our plugins going away, yes, Christian, but we're going to have like an API layer where the API we can actually talk to a platform. Highlight levels, yes, absolutely. Do I use fixed stops? For the open trade, yeah, I put a fixed stop in there, but it's more an emergency stop because sometimes you get in, it's as if the level's not there, like boom, straight past it. So for that case, I have an emergency stop, but quite often it'll bounce there. Quite often when it fails, it bounces there and like lays a couple of ticks up and then starts to tick down. In that case, I usually, stop out, break even, a tick or two loss. So it's not, it's not a hard stop. If he goes 4 ticks, he's trying to just manage it. And sometimes I manage myself out of it too early as well. So sometimes it goes up 2 or 3 ticks, comes back, and I get out, and it goes my way. And if any of you have been in the Jigsaw chat room, you will have certainly been there when that's happened to me. And see me call the trade. See me say where I'm going to get in. So I'm in, and then I'm out. And the moment I'm out, the market goes the other way. Okay. Right. Yeah, I agree. Bookmap does have good UI, and we need to clean up the UI in Vista. Absolutely agree. Any tips for setting bias on crude? Cumulative delta, isn't that useful? Not really, because the thing is with crude, it's not so important to set bias because it runs quite far, right? So with something like the S&P, what we've got in the S&P, we've got a 10-point range, right? So to me, you need to get in on a turn earlier. So I think I always talk about that the delta on the ES shifting 10,000 contracts to say it's changed direction, and I still hold to that as well. So there, if I see the delta shift up 10,000 contracts on the S&P and then a lazy pullback, yeah, I might hit into that on a long. It doesn't work on crude, but on crude it goes that far anyway that you can take advantage of the momentum without having we don't need a bias indicator. Yeah, I'd like to draw lines too. Would you recommend Thailand for expat lifestyle? Yes, great until your kid's at 15 or 16, and then you start to worry about them getting shot when they go out at night. Have you been using Mac? Yeah, you can use Bootcamp on Macs. I don't know. Bootcamp's in parallel. There is a version of .NET that works across different platforms that we're going to try and get onto at some point. CD is in Jigsaw. It's in DayTrader. DayTrader, Alex, is the standalone version of Jigsaw. It's this tool here. It's just a very, very simple execution tool for order flow traders. Okay, and we've actually got some prop traders using that as well. Okay, so that's DayTrader. I'm going to have to pay more. If you bought Jigsaw, you've got DayTrader for free. But you are absolutely fine sending money to me at sales@jigsawtrading.com if you want to. Do you have a time frame on SIM? Oh my God, yeah. It's like herding cats, Jim. I'm not sure when the SIM will be. I'm still reviewing the designs. Yeah, Bund's a good market. Bund runs. So yeah, absolutely, Bund's a good market. Eurostock's a good market. It's just a bit slow. And then of course DAX is just mental. But yeah, absolutely, Bund's a good market, and it's for those in Europe, it's good. Right, so Luke, I've actually got through the end of the questions. Thanks, Luke. Thanks everybody for coming. I do apologise for the person who spent a lot of time here before telling me they have no idea what I'm talking about. But what can you do? And if you have Jigsaw, you can pay extra for the advanced education. Yes, no problem at all. Thank you all for coming. I will put this on the website. and kind of hint that people watch it before going any further. So I really would think about this, separating the behavior from your trading plan so that you know which one is a problem. All right, so thanks for that, guys, and I wish you all good night.